Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Lewis, and I'm excited to share today's story with you. We're living in uncertain times, and investors are looking for safe haven assets to protect their portfolios. One asset that's been gaining attention lately is gold. The precious metal has been on a tear, with central banks and individual investors alike flocking to it as a hedge against inflation, currency devaluation, and market volatility. But what's driving this trend? Is it just a fleeting fad, or is there something more fundamental at play? Let's take a closer look. According to recent reports, central banks had been buying gold at a record pace, with global holdings reaching an all-time high of around 36,000 tons in 2024. This shift towards gold is being driven by a desire to diversify away from the US dollar and reduce dependence on Western-dominated financial systems. But it's not just central banks that are bullish on gold. Individual investors, particularly younger generations such as Gen Z and millennials, are also increasingly turning to gold as a way to protect their wealth. In fact, a recent study found that over 60% of millennials now include gold in their investment portfolios compared to just 20% of baby boomers. So, what's behind this shift towards gold? Is it a desire for tangible assets in an increasingly digital world? Or is it a response to growing concerns about the stability of the global financial system? Whatever the reason, one thing is clear: gold is back in vogue, and it's not just a niche asset for conspiracy theorists and doomsday preppers. As we explore this trend further, we'll be examining the implications for investors, the global economy, and the future of finance. We'll talk to experts, analyze the data, and separate fact from fiction. So, stay tuned for a nuanced and balanced discussion that will help you make sense of the complex world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into our middle segment, where we explore the latest developments from around the world that could impact your investments and your financial future. Today, we're focusing on a significant shift in leadership in Japan, as the country has elected its first female prime minister, Sanae Takaichi. This historic move comes after a period of political upheaval following the Liberal Democratic Party's disappointing performance in the July elections. Takaichi, known for her ultra-conservative views and strong stance on national security, has formed an alliance with the Osaka-based right-wing Japan Innovation Party to secure her position. It's essential to consider the implications of this new leadership on Japan's economic policies and its relationships with other nations. Takaichi has emphasized tackling rising prices and boosting the economy as her top priorities. However, her hawkish views and intentions to revise Japan's pacifist constitution could lead to interesting times ahead, both domestically and internationally. As investors, it's crucial to monitor how these changes might affect the global market, particularly in sectors closely tied to Japan's economy. The yen's value, trade agreements, and investments in Japanese stocks could all be influenced by the policies Takaichi and her government implement. On one hand, a stronger stance on national security and economic growth initiatives could potentially attract more foreign investment and stabilize the Japanese economy. On the other hand, any moves towards revising the constitution or adopting more nationalist policies could lead to increased tensions with neighboring countries and potentially destabilize the region. It's also worth noting that Takaichi's appointment as the first female prime minister of Japan marks a significant milestone for gender equality in Japanese politics, despite her own views on women's rights and gender issues being more conservative. As we watch these developments unfold, it's crucial to stay informed and consider how they might impact your investment portfolio. We'll continue to monitor the situation and provide updates as more information becomes available. Stay tuned for our final story of the day right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. Today, we've been exploring the world of investments and navigating the complex landscape of risk and reward. As we close out this episode, I want to leave you with some food for thought on dividend stocks that could provide a steady income stream for retirees. We've taken a look at three companies: Enbridge, Philip Morris International, and Enterprise Products Partners. These companies have a history of paying consistent dividends and have the potential to continue doing so in the future. However, it's essential to remember that past performance is not a guarantee of future success. Philip Morris International, for example, has been expanding its portfolio of smoke-free products, which could help offset declining shipments of traditional cigarettes. PepsiCo, on the other hand, has been diversifying its beverage and packaged food offerings to cater to health-conscious consumers. Enterprise Products Partners operates in the midstream energy infrastructure sector, generating revenue through a toll road business model that provides some insulation from commodity price volatility. While these companies may seem like attractive options for income investors, it's crucial to approach them with a critical eye. Consider factors such as their financial health, industry trends, and competitive landscape before making any investment decisions. It's also important to remember that dividend investing is just one aspect of a well-diversified portfolio. It's essential to spread your risk across different asset classes, sectors, and geographies to minimize potential losses and maximize returns. As we wrap up today's episode, I want to emphasize the importance of doing your own research and consulting with a financial advisor before making any investment decisions. It's crucial to have a clear understanding of your personal financial goals, risk tolerance, and time horizon to create a tailored investment strategy that works for you. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.